in there about how kind of I feel about the prop trading industry, and ultimately why I think Apex Trader Funding is probably the best when it comes to prop firms, in my opinion. So if that sounds like a little bit of you, it's going to be quite a long form video. I'm going to take it easy. I'm not going to rush through any of this because, you know, there's going to be packed with a lot of data. So, you know, if you want to stick around and watch that, great. If not, no worries, it's fine. What are we going to cover? So we're going to cover a number of things, right? So right off the bat, it's going to be a complete guide to getting started with Apex Trader Funding. I'm going to touch a little bit on the difference between futures and Forex. So if you're a Forex trader and you're moving across to futures, what the kind of insights might need to look like for you guys. I'll show you some kind of tips and tricks on how I use Apex Trader Funding, how I think the system, or how you should trade played against this type of system, because ultimately it is trail and drawdown. So there's ways in which personally I think you should trade that type of system versus end of day drawdown, or even more so like the diamond hands or the ones where you can hold overnight, right? It will be biased simply because I think Apex is the apex when it comes to prop firm trading. I'll talk why I think that's the case. I'll also share my stats, a little bit about kind of me and how I've done, and kind of a little bit about my journey. How I pass evals, I'll talk a little bit about that. I think that's an important concept because it took me a long time to figure out the system and how it needs to be worked. The difference between the strategy specifically for evaluations versus the performance accounts. So a little bit about that. The ratio between the pass and fail on the different accounts. So there's obviously a lot of different size accounts, but they're not all created equally. And so why I think specific type of accounts should be favored over others, I'm going to talk about that. Tradeovate versus Rhythmic. So Tradeovate and Rhythmic are the two intermediaries who you can use for Apex Funded Trader, or Trader Funding rather. And so each has their own benefits and limitations. So I'll talk about that. I'll go through how I specifically use Tradeovate. So I will show you how I link Tradeovate through to TradingView, because I trade predominantly on TradingView. We'll talk a little bit about contract sizing, the difference between minis and micros, and how that kind of affects things on the charts. And then lastly, second to last, we'll talk about copy trading, how we link multiple accounts so that we can trade off one master and then effectively trade or have them slaves copy off that master. And then finally, I'll talk a little bit about my strategy, about physically how I actually trade these systems. So if that sounds like a bit of you, stick around and we'll get going. So first in, first out, we're going to talk a little bit about the getting started guide, right? So how do we kind of get started with Apex Trader Funding? On the screen, you can see here is the website, right? So to date, you know, it's insane. They've paid out $140 million. In March alone, they paid out, what was it now? What did they pay out in March? I think it was 125 million they paid out in March. No, that can't be right, can it? Is it? 25 million, sorry. They paid out 25 million in March alone, right? The nearest competitor, who I won't say who it is, paid out, I haven't paid that out in 4 years. And so that's a little bit about why I think Apex, they're solid, right? They are a company who's been around for a long time now and actually back up what they say, right? So you can see just at a glance, you know, the average monthly compensation or the monthly payouts is nearly $9 million. Total payouts is 140 million, right? Which is insane. And in the last 90 days, it's 54. So a lot of really good things to like about that. So let's talk a little bit about how you get started, right? So there's a couple of things for an evaluation account, right? You're either going to select Rhythmic or you're going to select Tradeovate. Now, the difference between the two are Tradeovate plays nice with Macs, right? So I trade on a Mac mainly. And so if I trade on a Mac, I want to be able to not have to faff around with things like parallels. If I'm using like software that's Windows based, to be able to trade. So ultimately I use TradingView as my execution, analysis. All the software I use is all TradingView. However, I do use Trader8 as my intermediary, but I don't trade through Trader8. And so I like that simply because you can trade on a Mac with that. Rhythmic, however, is much more favorable to those who have Windows-based machines, because there's RTrader Pro, which is a fantastic software that keeps all of your stats in check, so you can kind of see where you are in terms of each account. And it's also slightly cheaper as well to use Rhythmic. If I had a Windows-based machine, I would go down the Rhythmic route, but I have a Mac, so I have to go down the Trader8 route. So some of the drawbacks on the Trader8, I think, are the copy trader. It does have an inbuilt copy trader that you can use. I'll show you that really quickly, actually. Let me just change across. So if I click to go on to Trader8, you will see here. I just open this up. On Trader8, when you have an account, you can see there will be a group setting here, right? It's not currently on because I don't have any live accounts right now, but you will have a group setting where when you drop down that account, you can link and drag a number of groups into that. That's okay, but the drawdown with that is you have to trade via Trader8 in order to trade as a group, which I don't really like doing that. I only like to trade through TradingView direct. So I don't usually group function at this moment in time until a better version of that comes out, unfortunately. So for now, if you're going to trade with TradingView, then that's fine. You can link them accounts, and I will show you how to do that as well. But let's just stick to the initial topic first of kind of how you get started, right? And then we'll come into some of the more beneficial elements that I think we'll cover. The website, right? So on this website here, right, I want to talk about the plans. So the plans, effectively, it's all to do with the ratio between the threshold or the goal, profit goal, versus the actual trail and drawdown, because the trail and drawdown really is what's going to get you if you don't know how to trade properly. And so stick to Trader8. If I go back to the start here, let's just have a little review, right? The three main components that I'm looking at are the contracts, so how many contracts I can use, the profit goal, and the trail and drawdown. And that will then tell me what that ratio looks like. So for example, you can see here on the 25k, we only have 4 minis and 40 micros. I'm going to cover what they are in a while, but just know for starting off sake, it's 10 micro contracts to 1 mini contract. So you trade 2 types of charts. Either you trade in the micro chart or you trade in the minis chart. Minis chart, you get more bang for your buck. It's $20 per point, or sorry, per tick, and there's 4 ticks to a point. And again, I'll show you that in the charts later if it sounds confusing now. Whereas a micro is 10 micros for 1 mini, right? So let's look at some of the data. 25k account, 4 contracts or 40 micros, so 4 minis or 40 micros. It's a 1-to-1 ratio between profit and your actual trail and drawdown. So that means when you start your account with 25k, you have to get to 26,500 without losing up to $1,500 in a specific move. Now it takes it from the high watermark. So the high watermark is basically like saying, okay, if I start off a trade and that's a brand new account and I trade with 25k and I go $1,000 up, I only need another $500 to pass that evaluation. But the problem is, if I don't take profit at that $1,000, so from 25 to 26k, if I don't take profit, my trail and drawdown starts at that high point while the trade is still in play. So if I go up to 26k and then I drop down back down to 25k, I'm $1,000 in drawdown now. Even though I went $1,000 up, because I didn't take profit, I'm now $1,000 in drawdown. That means now, if my account goes into deficit by another $500, because the maximum drawdown on a 25k is only 1,500, then I'll blow that account, right? So when I say the high watermark, that will change each time you do a new trade, because it's always unrealized until you close that trade. So if I go up and then down. My drawdown always starts from the highest point, so you've got to keep that in mind. So that's the drawback of a trade and draw down, because that's the bit that if you don't know how to trade, or you don't know how that moves, that is going to catch it out. But it's a one-to-one risk to reward, right? So you've got $1,500 to make with a $1,500 drawdown. Honestly, the benefit on that is the cost, right? So it's $167. However, if you're going to use a code, which I always would advise you to do, mine's there if you want to use it. You are absolutely not obliged to use that. It doesn't really matter what code you use. As long as you use our code, you're going to get your 80% discount. Currently, it's an 80% discount off, right? It just shows a bit of appreciation to me. It doesn't mean anything to you. You're going to get that same discount anyway. But on like a 25k, you know, if I look at the current cost on a 25k account, so what is it? It's 167. I times that by 0.8, so it would be 167 minus 133, $34, right? So it's not a lot. It doesn't cost you a lot. That $34 is obviously a nice easy entry cost for starting off with your 25k. But remember, you're only allowed 4 contracts to trade. That means your maximum amount of trading contracts can be 4. That's it. So it's hard to scale. So let's say you pass that phase and then you get your PA account. Your PA is your performance account, right? That's where you can actually earn the money. The problem with that is 4 contracts is okay, but you're still kind of limited in your ability to scale. 50k, this is my personal favorite. This is the one I would be drawn to, even if I was starting off new, right? Simply because you've got 10 contracts to start. That's a nice number, right? That you can scale in and scale out quite happily with that. Profit goal is $3,000, but your trade and drawdown is $2,500. So not quite a one-to-one risk to reward ratio, or not risk to reward, but quite a ratio. It's not far from a one-to-one, right? So you're $500 shy of that. I think that is the sweet spot in terms of the value, right? So again, it's $187. It's about $39 versus $34 on that. So it's an extra $6 or $7 to go with the 50k one. It's really worth doing it, right? Now remember, when you buy an account, you're paying for this monthly. So if you open an account, you hold that account and you just pay the monthly fee, which if you use the discount code, you're going to get that at 80% discount, and that will be recurring as well. So every month you'll pay that you'll get that 80% discount, and you'll hold that. It's almost like setting up a direct debit. You'll hold that until you either pass or fail. Actually, if you fail, you still have the account. You've got to cancel the account. Now, there's a sweet spot. If you've got 80% discount, and you fail a challenge, it's a $50 reset. So obviously you're going to cancel that account. And if you're going to get another account, you're going to get another 50k account, because it's $39 versus paying $50. It's easier to just open another account. Where that changes is anything above the 100k, because it becomes more favorable to reset at 100k or 150k for $50, because the discount is higher still to pay for those accounts than you would do. So 50k is certainly the one that I always favour. 75k is where it gets a little bit skewed, right? So you can see the trail and drawdown here is 2,500, but the trail and drawdown on a 75k is 2,750. So you only get another $250 of drawdown. But look at the difference in the profit goal. It's another $1,250 that you have to make on a 75k. So in my opinion, I don't think that that's really good value for money. Of course, it's higher as well. You know, it's $207 full value, but obviously with the 80% discount, it's a quite a lot less considerable than that. 100k, this for me is the worst pound for pound ratio in my opinion. Of course, you get 14 contracts, so that's nice, but your profit goal is 2 to 1, right? You've got to make $6,000 while only having a $3,000 drawdown. Of course, it's better than the 50k and the 75k, but in reality, it's not a lot of difference in drawdown. You know, $2,500, it's another $500 you're getting in drawdown from from the 50k. I just don't think the value's there in that, because it's a much harder target. You've got to double the actual trading threshold. Moving on to the 150. Here, for me, is another really good one that I would go for. Number one, you've got 17 contracts. That's a nice number to be able to trade with, right, in terms of scaling. Profit goal, of course, is high. It's $9,000, but your trading threshold is $5,000. That's a nice, healthy amount of drawdown that you can use. And it's a big difference between the 3,000, right? It's actually another $2,000 on top of that. So I think in terms of the best pound for pound plans, the 50k and the 150k for me are the best value for money, simply because of the drawdown to profit goal target. Move on to the 250. Again, profit targets gets a little bit insane here. 15k to make. You obviously get 27 contracts, which is fine, but you only get another 1,500 on top of that 5,000. So it's a difficult one. I think the ratios start to go too high for me in that one. And then the 300 again, 20k to make, and 7,500 in terms of your trade and drawdown. Now you do, obviously the fee for these is also quite high, but you know, that might be your game, right? We've got 35 contracts to work with. That can be quite a nice number to work to. Now, if you pass an evaluation, there's a fee to pay for the changeover from a standard account to a PA account. So usually, I'm going to show you now. If I'll just log into my account really quick. If I go to signatures here, you can see on my accounts here. I started with the 100k account before I really thought about the profit targets and the goals. I should have really thought about this, but I never. There's 01, so that's my account, Apex 127330, and then the numbers after it is the evaluation that I passed, right? So luckily, some would say, I passed on my first evaluation, which was 100k account. I didn't pass. It took me another 52 attempts before I actually passed the evaluations. So you can see here, I passed a couple of 150Ks, 51 and 52. It took me a long time to figure out, and I'm gonna talk all about the strategy and stuff like that, because I think it's a good point to raise. But it took me a long time to actually get to the point where I was more consistent. So you can see here, 52, 51 and 52, then 57, 80, 79, 80. So you can see now I'm starting to pass a lot more regularly in terms of the conversion rate of how many evaluations it takes to pass. It just takes time. You've got to figure out how the system works, and again, use the trade and drawdown to your advantage is the way to think about it. But there's a fee to pay, right? So you have two options. You can either go for a monthly fee, where you pay a reoccurring fee every month for the entirety of the time that you hold that, unless you lose it, or you can pay a one-off fee. Now, the fee for the 50k on Tradeovate is $105. That's the fee for the monthly, or it's $160 for the lifetime fee. So it's an extra $45 for the lifetime fee. Now, the thing you've got to think about this is, how long do you expect to hold the account for? More often than not, you've probably blown it after 2 or 3 months. But if you're going to hold it if you think you're going to hold the account at least for 2 months, then you're in a good spot, because that 2 months payment would be $210, and you versus the lifetime one-off fee, which is just going to be $160. So it's as broad as it is long. I think Apex played a blinder when they put that together, because they know a lot of people will probably go the monthly route because it's cheaper, but actually they might do really well and hold that account for like 6 months, and then they've lost out. But more often than not, if you're taking a withdrawal every 10 days, you're taking at least 2k on the 50k accounts, right? So let's get back into here. So we've talked a little bit about the kind of sweet spot in terms of what I would recommend, in my opinion, for the evaluations to go for. As I say, just for some insight into Rhythmic, you can use a lot of different trading softwares, right? So it comes into a couple of different things. I just like to use TradingView. All of my analysis, the way I trade is all TradingView based. All the indicators I use is all based around TradingView. So I have no problem. I like TradingView. However, a lot of people seem to like like Quant Tower. So if you're going to use Rhythmic, a lot of people like the Quant Tower route, which is a really solid software. There's also Motivwave. There's Ninja Trader. Now, obviously, Ninja Trader also has a really good copy trader that can be inbuilt. I think Apex Investments sell that copy trader, which is great because you can set a master and then have the slaves copy whatever that master is. So if you trade multiple accounts, which is what a lot of people do, you trade multiple accounts with just one account, and then you're not trying to like have 15 or 20 accounts where you're trading one account at a time, when the move that you wanted to catch was you wanted to apply to all the accounts, right? So there's lots of advantages to that. Also, the drawdowns are the risk, right? If you lose one account and you copy traded 20 of them, you're going to lose all them 20 accounts, okay? But why go with Apex? In terms of the actual evaluations, that right now, obviously, because there's an 80% discount and a 1-day pass. Usually, if there's no significant saving on, like I think the worst saving you've ever had is a 71% discount, and the normal 7-day trading rule, which means you have to trade for 7 days. So even if you pass in day one in terms of the threshold. So let's say you've got a 50k account, you've got over the 3k profit target. That's great, but you've still got to trade for another 7 days, right? So you can flip an account. That means, let's say day one you get your profit target, fantastic. Day two, you can open a micro and then close it instantly. Open, close, flip the account, done. Just do that consecutively for 7 days, and then you will get your PA. Performance account on that. But obviously you want to stick to the fact that you've got the 1-day pass, which means while it's on until April, end of this April, so it's the 30th of April it ends. But you want to take advantage of that, right? Makes sense to do so on the 1-day pass. With futures, obviously you trade, there's 23 hours a day you can trade. So I'm going to speak UK time. I don't know what that will convert to in US time or whatever else. But for me, right now, so markets close at 10 p.m. right at night, and then they open back up again at 11. So that 1 hour we call the dark hour, right, or the rollover hour. That's where you can't trade, and you have to have all your trades closed completely in the account, or you're likely to lose that account because the spread really widens completely during that hour, and oftentimes it'll wipe out your account. So you just got to make sure each day you however you're trading, you are closing that account. What else do we like about this? There are no real rules in the evaluation accounts, so you can just trade. You can trade news. You can trade, any kind of system you want, scalping, you can just, there's no rules really, in all honesty. Where it changes slightly is when you come into a PA account. You can't trade tier 1 news. They're like, the CPI, FOMC, ADP, non-farm payrolls. They're all classed as tier 1, the really big market movers. You can't trade the news events, right, on a PA account. But you can trade like 2 minutes after the news, you can trade straight, that's no problem. You just can't have a trade ready to go for that first initial candle. Also, there's the what they call the consistency rule, okay? The easiest way to describe the consistency rule is, let's say you pass an evaluation and you've got a brand new PA account. You have to trade for a minimum of 10 days, okay? So they have 2 windows, 2 payout windows, and it's a 5-day window. Just remember this: from the 1st to the 5th of every month, and from the 15th to the 20th of every month. Those 2 5-day windows is where you can request a payout. You actually receive the payout just on or near the next payout window. So if you request a payout on the 1st of the month, you'll probably get paid out around the 15th. And if you request a payout on between the 15th and the 20th, you'll get a payout around the 1st, 2nd, or 3rd. So you get your payouts in the next payout window, if that makes sense. But the consistency rule is the 10 days. So you've got to trade for at least 10 days. So brand new account, you're trading consistently. You take a payout during them payout windows. the consistency rule is what a lot of people get tripped up on because they either don't understand it or whatever, you know, they just forget about it. But it's really, really simple. Of those 10 days that you have to trade a minimum of, you can't have a higher day than 30% of the total balance. What do I mean by that? Not the balance, but whatever you make. So let's keep numbers simple. You've got a 50k account. You've got to trade for 10 days. And let's say on them 10 days, one of your days is $1,500, right? You have a nice day, and one of those days is $1,500. Now, with any account, with the 50k accounts, just let's keep it simple. 50k accounts, you have to, there's no trailing drawdown, so the drawdown stops, but you have to make 2,600, right? So it's $100 over the trailing drawdown. Let me just explain that a little bit, because I know that'll sound confusing, right? Look, if you look here, trailing drawdown on the 50k account is 2,500, right? So you have to get $100 above the trailing threshold. That means on a 50k account, let's start with 50k, let's add 2,500 to that, so that's 52,500 plus $100, that's 52,600. If you get your account to 52,600, you can request a payout. But you have, as long as you are within the consistency rule. So let's say you have $1,000 day or $1,500 day. Forget about everything else. Just do this simple calculation, right? I had my third day, I earned $1,500 on a trade. Fantastic. What does that mean now for the consistency rule? You're going to take your calculator out. You might not be able to see this, right? But I'm just going to show you. You're going to go, right, $1,500 is what we made on, you know, the third trading day as an example. I'm going to multiply that by 0.3. Sorry, my apologies. I'm going to divide that by 0.3. So I'm going to go $1,500 divided by 0.3. $1,500 divided by 0.3. Okay, it's 5,000. So what I need to do now is say, okay, a 50k account, I now need to add $5,000 for me to take a withdrawal. So I would have to take that account to 55k in order for me to be able to get a drawdown. That's because my biggest day was $1,500. So the consistency rule just means that it's okay that you make a nice amount of money on trading, but it's got to be consistent, right? You can't just have one big crazy day where everything goes great and then you're just flipping contracts. So the consistency rule is there not to underpin any kinds of tactics. It's just that, look, if that's the way you trade, that's the way you trade, but you've got to be consistent with that. If you have a big day, you've got to make sure that your account grows significantly as well. So just remember, take your biggest trading day of the 10 days and then just divide it by 0.3 and then add that to whatever the account is. So it's a 50k account, add that to the 50k account, you've got to take that to 55k. That's as simple as it needs to be, the consistency rule, but it's a really important one that you need to be mindful of. Otherwise, if you try and take a payout, you will get rejected on that payout. They will say you are, you know, you have one day, so you're 40% consistency, you need to be below 30%. Right, what else do we want to talk about? So let's if you're coming across from Forex, right, let me just give you some of my opinions on Forex trading. I don't like Forex trading. Number one, because I've never traded it. Number two is because, in my humble opinion, there's too many shady brokers out there. So that means that you know, you can pick a myriad of different brokers to trade with, but each one, let's say I'm doing the exact same trade across two brokers, same entry, same pip size or whatever you want to call it, contract size rather. You can then find that two brokers are going to give you two completely different outputs, right? One might get a really big spread, one might get done on slippage. It just depends on where the sizing of the where the order books are currently lying, right? It is what it is. And you hear a lot of kind of cloak and dagger stuff about certain brokers where they'll slip you, you know, the stop losses won't get triggered, take profits, whatever else. I don't like that, right? the reason I really like futures is simply because every single broker goes through the same order book, which is the CME futures, right? And what's fantastic about that is it doesn't matter whether I use NinjaTrader, Trader8, Quantower, whatever, you know, broker is signed up to the CME futures, it's all the same order book effectively. So, you know, everyone's on a level playing field. There's no, you know, being done by a specific broker, or Trader8 or Rhythmic didn't have this or that. It's the same effectively, right? It doesn't really matter. And so I like that. That gives me confidence to trade that I'm not going to be done, right? And then the other thing on that is a lot of the prop firms you're looking at the moment and all of the kind of, you know, ones that are failing, it's all on the Forex side, right? And simply because it's not being run properly. I look at Apex and I just think, you know, you look at Daryl, who's the CEO, it just does it right. No, you got to look, they're paying like $25 million out in March alone. I just think that's staggering. And so if you can afford to do that and, you know, not have a problem, then the future looks bright, okay, for that kind of thing. So I just think it's great. So let's see, how do we buy an account, right? So nice and straightforward, right? You're going to click on the account. You're going to go, whether you go on Rhythmic or whether you go on Trader8. By the way, Rhythmic is slightly cheaper than Trader8 for what it's worth. Unfortunately, I'm limited to Trader8 simply because I use a Mac, right? But let's say I want to go with a 50k account. I'm going to go Trader8. It's then going to say, put your coupon code in here. So that's where you put that. I have read you don't get any refunds, billing terms, data disclaimer, privacy policy, yada yada yada. You're just going to tick all of these, right? You can read them if you want, but wow, that's a pretty dull day, right? And then, you know, I'm just going to put any code here, right? I don't even know if that's going to work, but yeah, go next. It's not a code, so let me just put save 80 just as a test. Next. Okay. And now you're going to be presented with the discount, right? So you can see here, discount code is initiated, and that's now $37.40 for this. Put in my details, and then you can see here the subscription terms, $37 for each month. You're going to retain and maintain that until you pass, right? I click subscribe and pay, and then what will happen is I'll get an email. That email will say, it will give you two things. It will give you a username and a password. That username and password is your username and password, and it will remain with you you can't change it. It's a static password, static username. You can't change that. You're going to use that for Trader8, right? So when we come into Trader8, what you'll have on Trader8 is a number of things that you need to do. You'll when you first log in, right? Unfortunately, I can't show you it now because it's I'm already logged in. But when you try to log in on Trader8, it will just literally ask you for the first thing, which is going to be a username and a password. That username and password is really just what you've been sent by Apex Trader Funding. What you're going to do is you're going to go to this little area over here, and you're going to go to add-ons, and you're going to activate, which is free, the TradingView add-on. That's going to allow you to then link Trader8 with your TradingView account, so that you can do all your trading within TradingView, which is pretty good if you ask me. So that's I mean, you can trade with Trader8. You can also apply for level 2 data, which is really good. You know, if you want to see the order book and the limit orders, you can obviously pay that and then use the depth of market within TradingView or Trader8. Depends on what your preference is. But for me, I just want to use TradingView, right? You might as well also approve and activate all of these, because you get free indicators, free order flow, tick stream. The only one I don't do is API access, because I'm not using any APIs to take the data directly out of here. So next performance we're going to go into is trading view, right? So let's just go into that. So on trading view, you can see here you have trader weight down in this bottom corner. So to access that, when you've got your trading panel on, you're just going to literally go trading panel, bottom, select trading view. Now that's my specific username, okay, and then I will put the password that I have been given by by Apex Trader Funding. Once you put that in, you click connect, and then what you'll have then is a trade panel, a trade button there that'll allow you to set up different trades. So whether it's a limit order, a buy stop, a simple market entry, it's entirely up to you. But you'll see that will come on, and then you can trade directly, and it's rapid. There is no delay. You know, I've never had any issues. There has been issues on the Rhythmic side. We see a lot of issues on Rhythmic. I think when I watch some of the other YouTubers, but majority of the time I don't really see any issues on trader weight. So as easy as that, really. That's as simple as that to set it up. What else did I want to talk about? Is there anything else specifically? Contract sizing, right? Okay. We can do this actually, because I think this is an important point to raise, right? So you can see here on this left-hand side, we have MNQ and we have NMQ. M stands for micro. So that's where if you put a contract in, you're using 1/10 of the mini. Let's just stick to minis to start off with, just to keep things really simple and easy, right? So on this right-hand side, you've got the actual values of the tick size, right? So there are 4 ticks to 1 point. A point is going from 18,240 to 18,241. That's 1 point. So for every $1, it's a point. There are 4 ticks to a point. On the NASDAQ, the contract size of 1 is $20 per tick. So if you have 1 contract, so remember, just going back to the actual, if I just go back to the website real quick, just go here, just show you what this means. So you can see here, like on a 50k account, 10 contracts. So if I just go with 1 contract for every tick, which there's 4 ticks to 1 point, every tick is a $20 move. So if that 1 contract goes from, if I've got a 1 contract order that goes from 18,240 to 18,241, well, that $1 move, there's 4 ticks in that. So it's I'll earn $20 per tick for 1 contract. So 10 contracts would be $200 per tick, if that makes sense. So a 1 point move goes from what would it be? So $200 for 1 point, for 1 tick. So 4 ticks would be $800, right? So for every point that moves up, it's $800. Now on a contract, on a 50k, you've got to make $3,000. So it's about 15 points. It's a very, very small move, right? And so because there aren't any rules per se on evaluations, I figured out a long time ago that it's pointless trying to trade your normal style, in my opinion. And this might be open to debate, but I just think you've got to go balls to the wall, and you've got to think, right, where's the move? When do I think a move's going to come? And then just go for it, right? Because trade and drawdown's a hard thing to overcome if you're going to do it bit part, and you know you're waiting, and then you go into the bit of drawdown, and then you close your trade because you hit your stop loss. Now your trade and drawdown that was 2,500 is now $1,000 less because you took a stop loss, and now you've only got $1,500 drawdown. Then you take another loss. Now you've only got $1,000 drawdown, and that just gets et away really quickly. So my mentality, it's not financial advice, of course, but the way I trade, I just think, it's not the way I trade, but I'm not asked. I'm just going to go for it, and it's a small move. I'm going to show you how small of a move it actually is, just so you can understand. If I go back to Trading View, So we're looking at about a 15-point move. Let's look at this move here. That came in, right? I'm going to get my draw tool out. And I'm going to do 15 points, right? So, that is a 15-point move. That's all it takes to pass a 50k evaluation, right? Without the price coming back at you first. You've got to be careful, right? But, you know, if you look at that actual size of that move, it's not a huge move, right? So I don't ask about when it comes to evaluations. My ratio is about 4 to 1, so I'll fail 4 evaluations to pass 1. That's roughly where I'm at the moment. But, you know, it's each to their own. Now, the micros are... What are the difference between the minis and the micros? So, it's... one micro move, if you think about it, if you've got one mini, a micro is a tenth of that. So there's 10 micros to one mini. So that's obviously beneficial in the sense that you can scale in and scale out. Like, you might start a trade with 5 micros, then you might add another 8, then another 12 or whatever. But the idea is that as you're scaling with smaller scales or smaller increments, rather than going 1 mini and then scaling in with 2 minis and then maybe 4 minis, and then all of a sudden you kind of, you know, you're in deep a little bit, because minis price can really skip up fast. It's just a different way to scale. Now the way in which you decide whether you're going to trade minis or micros is by the chart, right? So this contract NQM 2004 is minis, and NQM is micros. So if you're trading on that chart, you're trading with micros, and if you're trading on that chart, you're trading with minis. It's not like you decide and say, okay, I want to trade this one with minis and this one with micros. It's just dependent upon what chart you're trading on. So you've got ES1, that's the S&P 500, and then you've got MES1, which is the micro version of the S&P 500 futures. So it's just to keep things simple. You're just going to search, right? You're going to go into your charts and you're going to go, you know, MNQ. And you can see micro, mini, NASDAQ 100 futures. Or I'm just going to type in NQ. And that's the E-mini, right? So mini or micro, whatever chart you trade on, the numbers will be defined by whether it's a micro contract or whether it's a mini contract. Simple as that. The difference is purely about the scale. A mini is $20 per tick, whereas a micro is a tenth of that. You can actually find out what they are as well on here, right? So if I go to the website again, you can see, if I scroll down further, here's the contracts, right? So I only trade equity futures. I'm not bothered about metals or commodities or anything like that. I'm really only interested in particularly the NASDAQ. That's the only thing I trade. And you can see here, right? So a tick is 0.25 of a point. So there's 4 ticks to a point, right? And for a tick size of 0.25, it's a $20 move, right? So for every $25, it's 0.25, or for every tick move, you're gonna for one contract, it's gonna be worth $20 point value. So that's the only way to that's the best way to think about it, really. Nice and simple. There's the scale in there. Is there anything else? Yeah, I want to talk a little bit about how I trade, right? Because I think it's a good thing to actually talk about, right? So the way I trade is pretty novel to the way I like to trade is pretty much linked to the way the system works, because you've got a scalp ultimately, right? I use session VWAP, right? The session is the full entirety of the day, so from the Asian session right the way through to London, and then right the way through to New York until that closes. That's what I consider the session, right? So for example, let's look at, I don't just use this, but I'm going to show this because I think this is how I trade. So what I'm looking for, I'm going to zoom right in here. Right, this doesn't look as messy, right? It's just because it's had the full day. But imagine this is live, right? So the white line here, I'm actually going to show as well, because I think it's an important thing to show, will be these. So Asia opens up. I'm not trading this, right? This is the start of the session here. This is like, for me, 11 at night. I'm not trading at night. Really, I'm trading in the morning when London opens here, right? But the VWAP is the volume weighted average price. I don't need to explain what the VWAP is. I'm sure there's enough people out there who knows that, you know, VWAP is essentially true value. When price is above true value, it always wants to seek balance, right? I've got loads of videos on TikTok about this, so go and follow me on there if you haven't looked at that, but I'll go into much more detail on that. What I'm really interested in is the exhaustion areas, right? So this is the second standard deviation, this area here. This is the second standard deviation. This is the third standard deviation. Above, this is the second standard deviation, and the third standard deviation below. These are usually what you would classify as extremes, right? When price gets to these levels, the likelihood of price staying there becomes more and more unlikely, and that's just a standard bell curve, standard deviation. Look into the math to understand it. Just know that it's more unlikely for it to happen. So you can see here, for example, you know, London doesn't really do too much, but then as it starts skipping up here, you know, we tag the third standard deviation, we tag it you know, a number of times, and then obviously, you know, you're thinking about potentially shorting when it comes up to these levels, right? Now, where you get in and where you get out is entirely up to yourself. I mean, look, we've taken out Asia's high here, right, with a good strong move. This may have not been the best example in all honesty, because, you know, when did this is 1:30. This was driven by news, right? I remember this session actually. It was driven by news, 1:30 my time. Price comes rocketing right up, but you know, it doesn't get past the third standard deviation. As the volume increases, so does the actual third standard deviation. So let's say you got in here as an example with a contract 15. You know, you're waiting for that move down, right? Now remember, when you're scalping, you're in and out. So this is showing a 5-minute candle. Let me go to the 1 minute just to see if we can see it a bit more clearly, right? Oh yeah, so that's exactly right. So there's the first time we hit the third standard deviation. So we got a nice move off that, right? So I'm patient, I will wait, okay? But let's say we got in right there, because that's where the third standard deviation is. We're looking for a 15-point move, right? It's there, okay? Actually, it was closer to 45 points in total. When's the next time we come high up to that third standard deviation? You can see here we had a nice move up. Didn't quite touch the third standard deviation, but it certainly gets the rocket fuel going in the head, right? Because you're thinking, okay, I'm waiting for a quick opportunity, in, out, shake it all about. You see here, didn't quite come up to the third standard deviation, but again, it's so unlikely that it spends an awful lot of time there without a retracement that it's just the way your mind starts to think with how to trade. Specifically, if you're a reversal trader like me, that's exactly how I trade. I'm looking for those kind of over exhausted. Now, because we start tapering off a little bit and the volume's already being pumped in, you can start to see we're struggling to even come close to the third standard deviation now. So now I'm starting to think second standard deviation might be the location, right? And you can see again we've got a nice big sell off here. Let's see if we've got any more moves that give us any insight. No, I finished off for the day there. So really, there was only two or three moves there that really give me that interesting point. But look at this. This was the actual. I think if you look here, what was that? That was news led as well. Around 30. Look how close we come to the third standard deviation with that huge move down. And then where do we go? I mean, if you're looking at how many points that move was, It was a 140 point move, right? That's a big move. So, you know, you don't have to go 10 contracts. You go one contract. And that's still going to be, well, figure it out. $80 a point at one contract. Not bad, right? $80 times 140. There you go. So that's how I trade Apex. You know, I'm looking at the highs and the lows, the session highs and lows. I'm looking at the daily ranges. But more importantly, I'm using standard deviations to figure out where exhaustion is likely to be. I don't want to try to make it sound too simple, right? Because obviously you've got to have an insight into liquidity. You've got to know what drives markets. But that's pretty much it. So, as I say, if you've got any value from this, obviously I would like it if you hit that like button. That's nice. Also, subscribe. I'm also on TikTok. I do a lot more shorter form on TikTok. What else do I want to say? Yeah, it helps me a lot if you want to use my code. It doesn't really matter if you don't have to use my code, by the way. The discount is the same whether you use my code or anyone else's. But what I would say is if you've got any value from this and you're going to go down the route of Apex, use my code. It really helps me out. Right, I think that's enough for this one, and I will see you guys in the next one.